Is this a huge bull trap? Or are we just getting started? Oh man, Bitcoin continues to rocket up now at 22,700. I've just woken up sitting my coffee here. And as you can see, the charts are going absolutely insane. But in this video, we need to analyze whether this is a continuation move which has more sustainability, or are the bears ready to snipe out these overzealous longs? We're going to cover off all the Bitcoin charts, what this means for crypto in the wider space, plus touch on some macroeconomy. And I think I found the reason Bitcoin is finally moving, and you're going to like it. So smash that like, don't forget to subscribe. Guys, yesterday we covered off, I think I was sat in the car or somewhere on my iPad making a really, scruffy video. I'm back in the studio now, so thanks for bearing with me, guys. But it's all about the content, right? Sometimes it might not be pretty, it might be on my phone, it might be on my iPad, it might be in the middle of a tunnel somewhere and it's noisy, you can't hear my audio, but I gotta get you that data. And we covered off the PPI data. So let's go a couple of days back when I covered off the PPI data, right? And when I covered off the PPI data, I released the video and I was super excited in that video. Why? Because of macro. And this is where people need to understand, you've got to take macro and technicals, but they don't always tie in at the same time. Because you've got to remember, technicals will move off random headlines and news as well. So we released the PPI, and I made a video saying this is huge shift, right? This is a huge shift. The PPI data is showing a substantial fall in the wholesale inflation, and that should help confound the fact that CPI and the battle against inflation is really coming to an end, right? So I made that video. And then what we saw is the price started to tank, and people were posting on that video, oh, this didn't age well. But you got to understand what happened. So I posted another emergency video to say, guys, the Department of Justice came out and just put this random PR piece to say we're going to post something really scary about crypto, and then they didn't, right? So it was a bunch of nothingness, and that's exactly what happened here. So this is going back a couple of days. We ran to the top of the channel, and this was our run after PPI. So PPI came in, we had a really positive day. Can you see that candle there, that huge wicking candle, this one here? That was our run after the PPI. And then boom, not only did we give that up, we started falling all the way down here after that DOJ issue. We then started spending some time around here. And then I shared with you this W pattern on Thursday, right? I said, look, we're forming a W reversal pattern, and this could give us some footing. So let's go back a step. Big bullish continuation move, right? We saw this, we consolidated here, and you expect this to continue to move to the upside, more likely than not. We saw that when we were in this channel, the bears were not present. How many times did I make a video saying, bears, where are you? I'm surprised. Like, I actually thought after this big move, which took us all the way up to 21,300, at least the bears would push us down to 20, make us go retest 20. They didn't. And so I was like, hang on, the bias is with the bulls here on this hourly time frame. Then we had the DOJ issue, we fell down, but we held footing, which again showed me that the bulls are in control of this move. So at this point here, and particularly this one where I made a video yesterday, I left my drawings on so you guys can see exactly. This was my drawings on my iPad yesterday. I said, what do we have? We have two higher lows, which means we're uptrending. And I drew the arrow to say we're pushing onwards now and trying to get our continuation move. Remember, the original continuation move, and I'm going to be conservative here because you can take this as the whole move all the way from when we went there. I'm just going to take it from here and apply this as the continuation move. And then to be conservative again, I'm going to pop it from here. Some people put it at the breakout of the channel. I'm going to put it right at the bottom of the channel. And can you see where it takes you? 23,400, which was our original target of this bullish continuation flag. Now, I wasn't convinced that 100% we'd reach all the way to that price target because we lost some momentum when we fell to the downside. But it just goes to show that this bullish continuation pattern was for real. It was just the DOJ issue that pumped us out. And this is a good lesson for all of us as traders, as people want to time the market. You could be the best trader in the world. Things like this you will get wrong, which is why you have to have stop losses. You have to have the discipline and the risk management to not over-risk your account. The best traders I've ever seen at major investment bank guys, these are people working at the best hedge funds and the best investment banks. I remember sitting with them vividly, and they would never get every trade right. Impossible. In fact, there's no correlation between how many trades you get right and how profitable you are as a trader. There are some traders who can get 30% of their trades right, but because their risk management is so tight, their R, which is their risk ratio, right? Because that's in check and their account size that they risk is so in check and smartly calculated, they're overall very profitable, more profitable than somebody who could get 50-50 trades right. Okay, so really important that you understand that risk management element. So this uptrend was, this was something that we could see. You could see that we mentioned yesterday, was it yesterday? Yeah, on Thursday, that the RSI reset, right? Because we were in bearish divergence. When this was moving up, this was moving down. And that gave us a clue that maybe we could see a slight move to the downside, and we did get that. But then the RSI did reset. It created a higher peak than this because we broke the trend, which gives you confidence that you could have had our next big move, and you can see the RSI followed suit as well. So nice move here on the hourly chart. But the question now is, what happens from here, right? Everybody's excited. Nice move. Congratulations if you guys benefited from that. I mean, in terms of your long-term portfolios, they're going to be looking a lot better now than when they were sitting at 15,000. But more importantly, you guys are starting to get a taster. And it's a taster of what this market can do. If you've not seen some of the pumpability, and I say that word on purpose, I want to show you something a little bit later in this video, but if you've not seen how powerful Bitcoin can pump, this is a good reminder for all of you guys. This beast is alive. And not only is it alive, it's alive and showed us on a night, Friday night, last night, and through this morning and Saturday, depending on where you are, it showed us that it's alive on a day when Genesis files for bankruptcy with a $5.1 billion hold. Right? So if this doesn't prove to you that Bitcoin is super resilient, loads of people question the strength of Bitcoin. It's never been hacked. It's never been taken down since 2008. Right? Many companies, many countries have banned and unbanned it. Minor bans. All sorts of government regulation against it. SEC against it. CFTC causing problems. Right? Department of Justice causing problems. FTX collapse. Terra Luna collapse. Inside fighting. Scams. Rug pulls. But it's still here because the technology is right and everybody understands that we cannot go along in finance without a decentralized solution. That is why Satoshi created Bitcoin 2008, and that is why we're starting to see this permissionless, immutable structure on a ledger really start to hold value. And that is why, despite all the things that I've listed going on, Bitcoin has recovered back up to 22. But we need to be careful. We need to hold perspective. That's what I'm going to share with you now. It's important to note that the fear and greed index is sitting at 53 right now. We're in neutral territory, and you can definitely feel that the market is feeling a lot more excited, right? More people are starting to talk about crypto. That random uncle is asking you again about crypto. You're getting a little bit of a froth. Now, it's nowhere near what a bull market is going to feel like. So if you've not been around for one of those, it's much more than this. It's this on steroids, but it's a little flavor, right? You're seeing the kind of candlesticks that Bitcoin can produce. You can see how crazy and suddenly it could just be up 7% when you look away from your phone. It's insane. And that is why a lot of us love this asset class, right? It's crazy. It's a roller coaster of emotions, but it's proving to you what it can do. But I need to share this with you. And this is what a lot of people are starting to neglect. And this is the reason I need you guys to be cautious. Okay, very important. What am I showing you? For those who aren't familiar with this channel, this is the Fed rate monitor tool. This gives you the percentage of the market that are pricing in a certain rate hike. Now, our next FOMC meeting is about 10 days away on February the 1st. And Jerome Powell is widely expected, 60% of the market are expecting him to just deliver a 25 basis point rate hike. To put this into perspective, we had 4 75 basis point rate hikes. At the last meeting, he cut that to 50 basis points. And now markets are already expecting him to cut it down to 25 basis points. But here's the kicker. 40% of the market now, look at how this percentage has climbed. It's around 30. 40%, this is not insignificant at all, and it's getting closer and closer to 50. 40% of the market is expecting him to pause at this meeting in 10 days. At this meeting in 10 days, guys. Can you imagine? So what I'm trying to say here is the markets are not listening to Jerome Powell. Jerome Powell sent a bunch of Fed officials this week out to say we still got more work to do. And that was the message he gave to them, and they gave that message. But the market's saying we're not falling for this, right? And I understand exactly this dynamic, because let me explain. Were Jerome Powell just to come out and say, guys, we've won the inflation battle, no worries, we've done it, PPI down, CPI down, everything's looking amazing, what do you think is going to happen? Risk is going to rotate back on, everybody's going to load into tech stocks, people are going to feel confident buying that fancy car and holiday again, and guess what? Inflation starts to bounce back, and it'll bounce back with vengeance now, and now you're in a tricky situation where you initially paused rate hikes and then you're going to have to climb them back up again. Okay, so Jerome Powell has to keep his foot firmly on the neck of the market. But the market, of course, with its experience and with its ability to front run Jerome Powell, is going, we're not buying that. We can see the data, we can see the metrics. There's been a major shift. And that is what I shared with you the other day. There's been a major shift. However you want to look at it, from the macro elements such as PPI and CPI and the jobs figures, or whether you want to look at it from the basis of the on-chain metrics for crypto. I shared that with you yesterday, the MVRV score, the Pearl multiple, right? We looked at these metrics yesterday, and you're seeing that they're starting to create this bottoming out function. So there has been a shift. There's been a shift in mindset. There's been a shift in risk appetite. And you can also see that by the dollar index as well. Let's jump into the dollar index. You guys know dollar index is inversely correlated to Bitcoin, right? And when dollar index falls, that indicates a risk on mindset. And if I just switch over to the daily chart here, look at this. We've been on a nice downward trend, just like we predicted. And by the way, guys, look at the beauty of this. We predicted this in September when we started drawing our indicators here to say, guys, we're creating lower highs, we're breaking the trend, and now we've gone to the downside. Huge, nice correction here on the dollar index, far extended from its EMA ribbon. Let's notch this up to the weekly, and you can see on the weekly, we've managed to flip the EMA ribbon as well. We managed to go below the EMA ribbon, waiting for the bands to flip, okay? When the bands flip, we're expecting an even more powerful move to the downside. Now, historically, if you look at the rejections that dollar index has had, they link up perfectly to when Bitcoin is able to run because risk rotates back on. And to further back up that claim, let's take a look at what happened in the traditional markets, because the traditional markets had a really good Friday, with particularly the Nasdaq soaring quite nicely. So we had the Nasdaq up 2.66%, S&P up 1.8%, and the Dow Jones up 1%. This is what gave a lot of confidence to Bitcoin as well over the night yesterday to carry on running, because if you got the Nasdaq running 2.66, you know that Bitcoin can outrun that too. So let's now jump back into the charts for Bitcoin, because I do have to share with you a few important things to be careful, because everything I've spoken about there is positive, and long term I am feeling positive, right? Eventually Jerome Powell will have to stop this tough rhetoric, and he'll have to start to admit that things are improving and then pause. And if inflation comes back, he can always re-hike the rates back again, right? He can pause to 0 and then he can do 25. My personal belief is that I think he'll do 25 at the next meeting now, and I also think that he may do 25 at the next meeting as well. Either way, as long as we get a pause either at the, not this meeting, but the one after, or the one after that. So if we look at the date, so I can give those to you. So you've got a meeting here on Feb. So on this one, the Feb the 1st in 10 days, I think he'll do 25 base points. Then on March the 15th, either I think he's going to pause in this one, but more likely in this one here. Okay, so that's what I'm expecting here in the markets. But again, markets, 40% of the market wants him to pause now. And that is why we have no room for error. And this is why we have to look to the downside, just to be careful. So even from a technical perspective, if you're looking at this chart, you cannot expect this move to just continue indefinitely to the upside. Now, I know it's crypto. I know crypto can prove people wrong. That's what it's doing right now. But we have to keep our risk management hat on, because we don't want to get caught in FOMO. In other words, you don't want to be this guy that buys right now only for this to come have a major correction to the downside at 20. Long term, it's going to be fine. If you're buying for your long-term bags, crack on, right? But even then, it's not a good habit for you to be buying on green days. You should be buying on pullbacks at the reds, right? That fundamentally makes sense. You want to buy when the markets are cheaper, right? When people are fearful, that's when you want to buy. Not on days like this where everybody is super excited and they're running the price to the upside. So when you look at this move, we had a really big move here to the upside. We ran up to 21,300 and then we consolidated, fell out of the channel, and then we've gone on our second run. So for me, a healthy run up creates scaffolding. You've heard me talk about this a lot. We move to the upside, you come back down, you build some scaffolding, you move to the next level, you create some scaffolding, and then you go back to the upside. And it's fine if you want to spend some time on the scaffolding, right? You can spend some decent amount of time here. That's fine. You can spend some time here, go up here, spend some time on this level, and then go to the next level. That's absolutely fine. But we're not seeing that right now. We're seeing quite a parabolic almost move. This was a consolidation for a bit here, and then a nice big move, but we're not seeing any downwards momentum. So it's showing us that the bears are asleep right now, and you're seeing that there are a lot of liquidations going on. We've had 400 million liquidations in just 24 hours. If you look to the long-short ratio right now, you've got 50% of the market, just slightly over 50% of the market priced as longs, but you've still got a decent amount of shorts in the market as well, looking to hold on, that think that we're going to get a major pullback. And this represents where we're at with the market right now. And I can't blame that for being the case. I said in yesterday's video that I'm expecting a lot of volatility in this market, particularly in Q1 and Q2. That was always my vision, and we're continuing to see that play out. Now, we as a community, and me personally, I'm positioning my portfolio in a view that I can benefit from both. And the strategy I'm taking very simply is when we get moves like that, I want to enjoy them. I want my long-term portfolio to look better. I'll glance at it, I'll feel good, and then I'll trade it if I get to trade some of the moves. If I can catch some of the breakouts and technical patterns, we'll trade those together. If you guys want to join us, ijaz.uk/TA will give you our TA course. So make sure you go watch that. But to trade with us, check out the links in the description to BYBIT and BitGet. Those are two exchanges I'm currently using. Make sure you check them out, offering some amazing bonuses. In fact, BitGet just messaged me the other day saying, guys, if you just sign up and trade any trade of any size, they're going to put $10 into your account. If you deposit $1,000, they're going to throw $50 into your account. So if you're playing with that kind of money anyway, you've got $1,000 which you could just transfer across. They'll activate your $50 just regardless of the size of trades. You can even put a small trade and they're going to give you $50 for free. So definitely take advantage of these bonuses as and when they come up. I mean, it's worth doing so, right? Just like you'll take advantage of credit card rewards, you might as well do the same with exchanges as well. Definitely, that's what I want to do. I want to make sure I'm benefiting. Now, if the market pulls to the downside, that's beautiful, right? That's when I'm looking to add to my bags. So if we get a retracement down to 20, I'll nib a little bit. More exciting is if we head down to 18,700. So again, let's notch up to the 4-hourly. Look where we are. Very extended from our EMA ribbon now. And this is looking beautiful because initially when we were on this move, the retracement into your EMA ribbon brought you to 20, right? But now look, a retracement down to your EMA ribbon is now at 21.5. So huge positive progress here. Even if the bears want to push us down to our EMA ribbon now, that only brings them to 21.5. So the first support for me is this 22,000 mark. Then we've got 21.5 all the way down to the bottom of the EMA ribbon around 20.5. Then you've got your psychological level at 20, and then we can worry about the top of the channel, the bottom of the channel here at 18,700. Now it's important and very significant, the level which we just broke. I'm sitting here on the 4-hourly, and I know this is messy, but I'm just going to walk you through this, guys, because this is really important. If you were with us from when we collapsed with the FTX collapse back in June, we fell all the way down to 17,600. And then if you remember, we spent a very long time in this channel, all the way to where we're at now. This channel still is relevant. And this channel is all the way between 18,700 on the bottom line. This bottom line is 18,700. And the top side is 22,000. So the significance of this is we've managed to break above that channel. Okay, we've managed to get above that channel in this breakout. So now what I would love to see is a retest of that channel. Okay, feel free for the price to come down, retest strongly at this level and see a good volume bounce to then fight the 24,000 level. Because I don't feel like we're going to have enough steam to just keep going up. I'm happy for us to pull back because it will actually give our next leg up more power. And why do we need more power? This is the reason. If I come up to the weekly chart now, exactly what we were saying. We're enjoying a beautiful relief rally. And by all means, we don't want to be perma bears. We want to enjoy this. But we need to understand that the EMA ribbon is coming with vengeance. And we do not clear this EMA ribbon until 25,800 roughly. So a 26,000 close will get us a close above our EMA ribbon. So we've got huge levels of resistance at this EMA ribbon. You can see the last time we attempted it, we almost broke it and then we got thrown violently straight back down. So it will act like resistance. There's no doubt about that. Let's also bring out our Bollinger Band. And what do you notice from the Bollinger Band? We're coming to the top of the Bollinger Band. It'll be hugely significant if we can get a break of this Bollinger Band and the next weekly candle, this one closes tomorrow, but the next weekly candle, if we can push through above the Bollinger Band, hugely significant, right? But remember, top of the Bollinger Band, just like the EMA ribbon, can and most likely does act as resistance. So we've got to be prepared for that pullback. Let's also bring up the VPVR. What's the VPVR showing? We're right at this point of control. We're breaking through this point of control. We're still at a high volume level, right? These are all high volume, highly traded areas. And it pretty much runs up to 24.5 at this level here. Once you break past 24.5, then things start to get a little bit easier. You've got less volume in this period, and you can see us work our way up to 30. We'll reclaim our weekly EMA ribbon, and things can start to look more positive. We can then figure out, okay, are we going to move sideways? And when can we then prepare for our next bull run? Okay, because remember, we're just over a year away from halving. So we've got to start positioning ourselves in some sort of sideways motion before the next run. If you look at historical bull markets, you had a year and a year plus of downwards movement. Then you had almost like a year of sideways movement. So maybe we can go into some consolidation to wind up the jack in the box ready for the next bull market. So really important, VPVR, we need to respect this level. There is heavy volume trading at this level as well. But guys, with all that said, the one real reason Bitcoin is pumping, I discovered late last night and I was just online scrolling around and I found this one reason, and all the stuff we just looked at, the macros, the on-chain which we looked at yesterday, the technical analysis which we did, that's all fine. But the real reason that Bitcoin is moving is this.
the pump. Always, guys, respect the pump. I respect the pump in all assets. Why? Because it's kind of like karma. You know, the power of the pump always comes back to you if you respect the pump of other people. It's crazy, but I have this belief that whatever pumps, you have to pay respect. Because otherwise, if you like, oh my god, this scam coin is pumping again, actually you are kind of rejecting the pump from your life. Maybe it's a bit out there, you know, woo-woo, but we all gotta believe in something, and I do believe in the power of the pump. It's kind of like, you know, let the pump be with you. I went to bed yesterday. I told you guys on Twitter. Good night and let the pump be with you. Okay, this is how I see. It's like this force. It's like this force that is all around us. And if you are really inviting the pump into your life, it will come.
So that's it, guys. You've just got to respect the pump, and if you respect the pump, you get a pump. Hope you guys enjoyed this video. Smash a like. Don't forget to subscribe as always. Check out the links in the description. Make sure you take the weekend to watch some of the TA course, Ijaz.UK/TA. It will not take you more than a couple of hours, but more importantly, you should keep it to the side as a TA encyclopedia. The whole point of the guide, I've split it into sections so you can refer to it whenever you need to. Let's say you think you've seen a head and shoulders pattern, refer to my video, watch the 3-4 minute video on head and shoulders pattern, understand it, and see if your training is matching up to that pattern. Hope you guys enjoyed, and I'll see you in the next one.